We're here to investigate what happened. We've seen a tremendous pullback in the market over the last 24 hours. Why is the market so red? And today, we're going to look at South Korea. Looking at the top three coins, it's very easy to see when you pop into Ripple here that the market dominating Ripple's value is clearly the Korean won here at the top with north of 35% of all trade volume, and we're looking at almost $400 million in volume traded in the last 24 hours. It's no secret that the South Koreans are very fond of Ripple and have driven its price up tremendously over the last months and now down as well. There's some things happening in South Korea that started a few weeks ago and are now coming to fruition, and we need to look at exactly what those are to understand what today's sell-off is all about. Today is January 30th, and that is exactly when the regulations for South Korea's trading are coming into effect. So South Korea is trying to tackle the issue of virtual accounts that are not linked to anyone's identity. And these virtual accounts are not subject to what they call KYC, which is a know your customer rule, know your client rule, which is very common here in American stocks. You're not allowed to trade stocks or securities without being known to the government, and it's a sort of asset declaration. Just like on Coinbase and regulated exchanges, you're just simply not allowed to enter those exchanges without the government being aware of your asset transfers. So this is very common in America, and we're going to see it become more common, I think, globally. But where it wasn't common was in South Korea, a very hotbed for activity in the cryptocurrency space. And now we're seeing that hotbed get a little bit of cold water thrown on it, if you will, by the government, who are trying to get a hold and a handle on what's going on. So they've instituted a rule where all customers must be known to their exchanges. This actually goes into effect very soon. It goes into effect today, but there is a grandfather clause where if there are virtual accounts with assets in them, they're able to be liquidated and moved out of the market, but they are not able to continue trading in the open. So what you're seeing today is the first day that this rule goes into effect. And we have to understand the South Korean trading environment here. The hype is very real in South Korea, and their market prices are on average 10% higher compared to the rest of the world. This is a significant increase, right? People are paying a premium in South Korea for this crypto. They absolutely love it and they believe in it. So the fact that this virtual account environment is being shut down, this sort of free-flowing, not Wild West, but very unregulated environment is sort of ending. The South Koreans are definitely having a little bit of a tightening up of their, what was a very vivacious and very free-flowing cryptocurrency economy where they were paying top dollar for each and every crypto they were touching. So it's worth pointing out here that this is probably going to take effect over the next few days, and that we've already seen this total market cap number bounce down to 5. Let's see if it went under 500. And what we're really looking for is to see where this is going to bottom out. We're seeing where is the bottom from this Korean sell-off. We're looking here, it hit 498, and that was at about 19, almost 8 o'clock last night. And we're seeing it start to come back now off of this dip. Hopefully this was the virtual accounts getting out, and now we've seen the worst of it, and we'll start building now with all of the other accounts that now they know the regulations. They're aware of the South Korean regulations now. It's a little less fear, uncertainty, and doubt, and a little more certainty as to where this is heading. So hopefully as this chart starts to pull back, this will have been the most of the South Korean accounts that have liquidated, and hopefully we'll start seeing a nice gradual climb here as we work our way into February, get out of this January blues, these January woes that we've had, and start building towards the end of Chinese Lunar New Year in mid-February towards a healthier market in March. Thanks so much for tuning in. This has been another episode of FUD News Updates. I'm your host, Elliot Trades. We're trying to bring you the newest and truest in the crypto space each and every day. Please give us a like or a comment if you liked or enjoyed this video. And please don't forget to subscribe if you're a cryptocurrency investor or simply enthusiastic about the space. We make between 3 and 5 cryptocurrency videos here each and every day. So subscribing is not a bad idea, as you'll be given first access to all of our content. Thanks so much, and we'll catch you on the next video.